Hey everyone, welcome to episode 20 of my weekly wrap up and the podcast, April 10th through the 15th, the year 2022. Incredible. Before we get started, a little bit of a heads up. Happy holidays to everybody. We've got Easter, Passover, whatever holiday you're celebrating. I wish you the happiest with your family and friends. And just a reminder, on Saturday, we have an earnings webinar 12:45 if you sign up at www.tradeearningsnow.com. Tradeearningsnow.com, www, of course. You'll get a free Netflix workshop Tuesday, the 19th in the afternoon. Netflix releases earnings around 4 o'clock. We'll start that workshop at 3:30. Tradeearningsnow.com, www.tradeearningsnow.com. Sign up, but you have to come to the webinar 12:45 Saturday at Traders Corner. Let's get started with our weekly wrap. So, every week is always interesting. You can't deny that we learn new things every week. This week, our lesson probably is ATR. One of the room members gave us some good tips about using ATR times 3 for calculating stop sizes, and that will help, especially with crude oil, gold, and any commodity in particular could really help if you use an ATR, and the NQ is helpful. It's helpful also. So let's get started with the week. And the reason I bring this up is because we're doing a lot of earnings openings now in the trade room with our software and with a special indicator, tick strike. So we want you to come into the trade room, learn how to do this, because here's the results this week. On Monday, the NQ was positive. In fact, the NQ was a winning trade every day. Every open was a winner this week. You can trade with micros if you don't have a very large account. If you have a large account, you could trade with the full size NQ. You can make some serious money on openings if you have a setup that works. And right now our setup is working really well on the NQ open. Oil, not bad. I mean, we had a winner on the 11th, Monday. We were stopped on the 12th. We had a winner on the 13th. We were stopped on the 14th. But we learned absolutely unequivocally that ATR could have saved one of those losses. So instead of being 2 out of 4, it could have been 3 out of 4. And as we go forward with oil, we haven't been live on oil yet. We have been live on the NQ using the micro so everyone could see and take part. But this coming week, we're going to probably go live with the micro oil. And every now and then also, when there's news, we trade the gold open. And our rules are very specific. We don't have to do a lot of analysis on the open. You make an appointment with the market, like we always do, 10-minute trades. You know our routine. We make an appointment. Gold is 8:20, oil is at 9 o'clock, the NQ is at 9:30. All times are Eastern time. And we take the best signal that we get and we go in that direction. You could be bullish before the report and you could have a bearish open on all the commodities, all the indexes. So it's a great way to trade, especially the way we trade. It fits our DNA perfectly. So the oil open, NQ open, and occasional gold opens when there's other news is our plan for gold. Very, very promising trades. A lot of members are excited taking part in these trade rooms. So this week that's passed, we've covered the opens. Core CPI on Tuesday. Very interesting trade. Now, we had a problem with the report last month. I take it back. CPI last month made some money, but the NQ's been whippy on that report. We've been looking for an even better setup if we can find it. And we also tested the ES. The NQ on Tuesday reversed very quickly. It hit our first target and then it stopped me out. So I lost money on the NQ, but I traded the ES live. We have a great new setup for the ES. I made more money on the ES than I did on the NQ, so we had a profitable CPI trade. Going forward, I really like our ES setup, and I'm going to possibly update the DMM to reflect that. Both trades are noted on the DMM, so you have the opportunity to trade either one. Very important, we upgraded our range length. on CPI and PPI, and it made for better trades this week because the PPI on Wednesday was a full winner, and that's going to be our trade of the week. So you'll see that with more depth in another video, but PPI was a nice winner. The Bank of Canada rate statement on Wednesday was a trade that I was very uncertain how to trade it, to be honest. It had a very bad history. I was probably over conservative. I was waiting for a move after the trade. I missed the reversal. It was too fast. And it could have been just a normal breakout. It actually worked fine. It would have been not a problem at all. So it was a no trade. I left out a couple of trades on Tuesday. Let's get back to the 10-year bond auction. You know how I feel about the bond auctions. They've been really troublesome because of liquidity and bad volume and miserable fills on ZB. And we came up with a very clever way to trade it. It made for a winning trade, a very nice big fat winner on Tuesday. But unfortunately, the 30-year on Wednesday didn't hold up, and we had a small loser on Wednesday on the 30-year. The bonds have me so frustrated because the setups are not working on ZB, but our gold setup worked both days. So I think we have an alternative gold setup for the bond reports, which we will start trading live next bond report, which is this week on the 20-year. So we'll get to see if it works. API, Tuesday afternoon. I don't know what to do with API. Used to be my best friend. API is now a troubled brother or sister, mother, father. I don't know what you call it. It's not a family member anymore. It used to be a family trade. Now it's in the corner being punished. We didn't even trade it Tuesday. The performance has been so bad over the past 6 weeks that we just took the week off. Would have been a stop out. It was a great decision. We'll take a look this coming Tuesday. I'm always tempted to trade it because I've been trading that report for 6 years. I love that report, but if it's not behaving well, you got to just take a break. So we'll see on Tuesday. Now on Wednesday, we had crude oil inventories. Very nice winner if you took that trade. Our account has not been brought up to snuff yet to trade the oil report. It's pretty volatile. So we're waiting for our 10-year anniversary account reboot. We're going to do a lot of different things trading wise, trade a little bit bigger. So the oil report, I didn't trade it live, but it was a great winner. You could tell the analysis was right there. And then the Australia employment report. I was moaning and groaning in the website how I was sorry I called it a family money trade. I was really worried that the DMM we sent out wasn't going to work. And I was really concerned that people might trade it and lose money. Turned out the DMM, which was a bracket trade, worked fine, probably about 10 ticks, not moving very much these days. And the trap trade, it was only able to get about 9 ticks, but the breakout would have gotten you double the amount of ticks because it would have been both contracts, just the way the trade would have taken place because of the difference in the setups. You would have had a better profit on the breakout. It would have been about a $90 trade instead of a $45 trade with 2 contracts. On the trap trade was the smaller profit. So I think we'll go back to the breakout on Australia jobs. Neither of them is very impressive. It's not losing money. It's worth trading. I probably shouldn't call it a family money trade anymore, but it hasn't been stopped since I can remember. So, I'd probably trade, a small amount of my family's money on it. Maybe we could say that. And then on Thursday, we had the ECB main refi rate. That's a bank statement for the European Union, basically. The ECB is the bank, European Central Bank. And that was the perfect example of my biggest problem as a trader, jumping out of a trade too fast. And I could make an excuse, and I will make an excuse. I truly thought I was being stopped out on that trade, and I shrunk my targets and my stops to, so I wouldn't lose money. Maybe fear took over. Maybe it didn't. Maybe I was really trying to manage the trade properly. But when you really analyze and you're really honest with yourself, I'm going to say that I let my fear get the best of me. Instead of making close to 200, I only made about $50 on that trade. The DMM worked fine. And it was good. It's been a good, solid trade for the past four periods for the ECB. U.S. retail sales was probably the disappointment of the week. It wasn't that it was that big of a loss. It was not gigantic, but it was a painful loss. But the issue was all the trap trades for U.S. retail. I've been impatient for the past 5 months, and I've left a lot of money on the table. This month, I was totally patient. Had I jumped out of the trade fast, I could have had a $100 profit. Instead, I got stopped out. So that's the maddening, frustrating part of trading. It can drive you crazy, but it is what it is. And so next month, the retail trap trade should be a good winner because it doesn't lose that often. Then we had a very interesting last two trades. Let's go. Natural gas was just a stop out. It didn't work. It was the final trade of the week. Matching news was the nemesis. When the news result is exactly the same as what's expected, especially in gas and oil, it very often creates a jump up and down in the price. That causes a stop out. That's what happened to me. But I want to talk about the preliminary University of Michigan. It was a phenomenal trade. It was phenomenal trade management. I took a guaranteed losing trade. I was absolutely positive that the market was too volatile for our setup. I said it in the trade room that I'm really worried about taking this trade, but I'm going to take it because it had won 5 out of the last 6 trades, events. It's been trading well. You have to trade it when it's got 5 out of 6 winners. The market was very volatile on gold. It filled me early before the news came out. With a little bit of luck, it hit my first target. I immediately moved my stop to break even -2, and I saved a loser. A full $200 loser was a $20 winner because of great trade management, being on my toes. I don't always take big credit in the trade room, even though it was a tiny winner. The beauty of it was it turned a loser into a winner with good trade management. And I was really happy that I had a plan. I was thinking about what to do if there was a problem with the report. There was a problem. It entered me early before the news came out. That then becomes a coin toss trade. It's not based on news, it's just luck. We got a little bit of luck, hit our target, moved the stop fast, wound up grabbing a couple of ticks, and then it reversed, would have been a full stop out. So felt really good about that trade. And that, my friends, is the weekly wrap up. It was a 1 day shorter week because of Good Friday. One more time, I want to wish everyone the happiest of holidays. Don't forget our 12:45 a.m. Saturday earnings workshop, free Netflix earnings class. If you come tomorrow, www.tradeearningsnow.com. I say tomorrow, assuming that you get this video on a Friday. www.tradeearningsnow.com. Very good opportunity to make good money on earnings this month. All the major stocks are trading by themselves, meaning you don't have Intel trading with Amazon the same day at the same time. Don't forget we use futures to trade stocks. Very important. We use futures and our software to trade stocks. This is Lee Goldstein, episode 20 of our, I think, really enjoyable new podcast. So you know what I say every week. I'll see you in the trade room. Take care, everyone. Have a great holiday.